Good day, all. Let's answer the question that is asking what are the benefits of buying shares in companies. Before I answer this one, I would like to make a clarification that I'm not a financial advisor. However, the information that I share is just for education purpose. We must never take it as a financial advices. Okay, now this is how you make money. How you benefit. Let's give you an example that you bought shares which were trading at $10 per share, and then you have used a 1,000 that to give you 100 shares. In case if the company has been performing well in a market, and maybe there is demands of the company's products in a market, the share price of the company is likely to increase. Let's give an example that it increased to $15 per share. Now, if you multiply 100 shares that you have with 15, that is a 500. Now, that will be counted like you made a profit of 500 on top of the 1,000 that you have invested. The other benefit again is on a dividends. The dividends happens is that when the companies normally declare dividends. Some companies pay quarterly, which is like 4 times a year. Some companies pays twice a year, and some companies pays once a year. Now you have to find out information about the company that you are investing. What time do they pay their dividend? Is it maybe quarterly? Is it annual? Or is it quarterly, annual, or how? The dividends happens like this. The companies, if by after seeing the performance of the company, the management of the company, after seeing the performance of the company, they normally decide that they normally decide how much are they giving back to the shareholders, which is now by that time is you now who have put the money in the market in a company. So that's is like saying thanks for you for giving us your money. So we have now made this profit. So we are going now to share a certain percentage of the amount. Now what happens is like this. If let me give you an example that maybe the company that you bought shares declare that they will pay $5 per share. Now what you do is you now take the amount which is declared, which is now $5 multiplied by the 100 shares that you have. That's already that will give you $105. Now if you take $105 plus the 500 that you have made, now in like that is like on a 1,000 that you have invested in a company, you have made a 600. But the other 500, which is a growth in a value, because the shares have gone up, you only benefit on that one if you decide to sell your shares, or maybe you decide to sell some part of your shares. Okay, let me give you an example that since now you have 100 shares, and then you decide that this time around I'm going to sell 50 shares. Now what's going to happen is like by that time you'll be you're selling your share, which is 15 multiplied by 50, and then you got a 750. But you are still keeping the other 50 shares, which is still very also on a 750. So now on top of the 1,000 that you have invested, it's like you have recovered already more than half. In that way, it's like you have recovered already more than half of what you have invested. So that's basically that's how you make that's the benefit of buying shares. Then, but I would like to inform you that as much as there is benefits, whatever is benefit also have a negative, or have a the bad side of it, which is your money also. Investing is risky. You can also lose either half of the money, or you can also lose the whole money that you have invested. That one is due to maybe the mismanagement of the company, the bad performance. Let me say maybe the company was the management have made some errors that cause the company to be closed. Now in that way also you are likely to lose your money, as you don't know what will happen to the company. So I hope that they've answered what was the question about.